Good afternoon again, and welcome to the Big Iron Farm Show. We've had a great day, and we've got one more great seminar coming your direction. We appreciate you joining us. This is a session that I think is important to everybody, no matter where you are in life. We're talking about defending the legacy, financial planning strategies, tax, legal, risk, and wealth. Marissa Nielsen is the best of the best. We're glad to have her on our stage from Freedom Financial Group. Please give her a warm welcome.
Whoop, whoop. Hello, hello. Hey, thanks for being with us. We're gonna end out the rest of this day in a great way. I do not have a blue planning packet with me right now, so if I could grab one of those from one of the FFG team. And if you did not get one of these handy dandy packets by this beautiful gal in the green jacket, you definitely want to raise your hand because we've got a whole set of information here for you that you want to get today. This is going to follow many of the little pieces that I've got as far as strategies inside the presentation. So if you don't have one of these, you definitely want one of those today. Thanks so much for being with us today. I had a really good opportunity to speak last year with the Red River Farm Network. Really had just a fun turnout. We've got offices in Minot, Bismarck, Jamestown, and Fargo, but we have clients in 43 states. So we are really all over the United States. Freedom Financial Group, for 30 years, it has been my passion and my mission to help farmers and ranchers. And we've got teams in each one of these locations that can help you, that specialize in estate planning, transition planning, tax, legal, risk, and wealth work today. So I'm here not to sell you a thing today. I'm here literally to do education. I believe that there are three very important things that we do today at Freedom Financial Group. We educate, we empower, and we equip you to make great financial decisions. Now, I'm gonna just put this little disclosure up here because everybody knows a lawyer and they are long-winded, yes or yes? That's funny. Okay, you're gonna have to help me or I'll throw chocolate at you. It's good. All right, so yes or yes, this is a disclosure that basically says I'm not giving you any individual tax or legal or financial advice or medical advice or any of the above. But if you see our guys afterwards, we can definitely help you with those things. So as I begin to talk a little bit about where I come from, I am a farm kid from Max, North Dakota. Who knows where Max, North Dakota is? Thank you, thank you. All right, so I grew up on a farm in the late 80s. We lost our farm, and I learned a lot of lessons during that time. There were 8 kids in my family, and if you chose not to work, you chose not to eat that day. That was an opportunity. My parents called that an opportunity when we did things like rock picking or combining or whatever else that we had for tasks or chores that day. What I learned during the late 80s, and how many of you were farming during the late 80s? Yeah, if you were farming during the late 80s, you did something that my family farm could not do, and that is survive. During that time, you know, the interest rates were really high. Drought was knocking at our door for several years in a row. And as we went through those droughts and we went through those high interest rates and we went through that perfect storm, in the middle of that, my grandfather got very sick and my dad had to take over the farm. Now, when my dad took over the farm with the 8 kids and my mom, we were not equipped with all the things we needed, like one of those things being money. We needed some money, right? And we had a lot of assets, but very little cash, and now a lot of debt. And during those times when we were seeing, 14, 16, 18% interest rates, how many of you in the room remember this? Now, all the young'uns in the room, they don't remember this. And so they've come out of a season for the last 10, 12 years when we've had unbelievably small interest rates, yes or yes? When you're looking at 3 and 4% on those long-term interest rates, that's been really great. But when you have to make that farm work and finance that farm at 14 and 16% interest rates, it's a whole different ballgame. Or 8%. And we're headed there very closely, guys, when you start looking at what taxes and inflation have done in the last few years, things are going up. So I learned some lessons during that farm, and I'm that kid that's hanging out of the top of the combine here. During that time, the auctioneers came in, and God bless them, they did their job. But the auctioneers came in and they lined up everything along that farmstead. And I for the first time in my life, saw my grandfather and my father cry. As piece by piece by piece, homesteaded land from my grandparents that came from the Ukraine, homesteaded land, the legacy was gone. In their minds, everything that they had worked their entire lifetime for was now gone. And as I watched those things happen, in addition to that, it destroyed my parents' marriage. And so my folks divorced during that time. As they divorced, we moved into Minot. into a 2-bedroom trailer house. My dad left and did not return to the state of North Dakota since then. Could not face it, because when the essence of a man is wrapped up into his farm or his ranch, and he loses everything during that time, including his family, everybody loses. Everybody lost during that time. So I know many of you know families who have gone through what I would call the fire of having a farm, and so did we. And it's one of the things that have put us here today, given me the passion to be here with you, because I want to make sure that if we can give you the right tools and we can give you the right strategies and we can give you some practical, tactical strategies to use with your farm or ranch, your story does not have to be my story. Your story does not have to be your family's legacy. And so what we've done is we've helped people through creating a guided planning system. We call this a GPS, and we focus on the core 4: tax, legal, risk, and wealth. How do these things all work together? And what I hear many times is it's so confusing. It's so confusing because the lawyer says this, and the accountant says this, and the insurance guy says this, and the investment guy says this, and then I talk to this other guy over here, and then I talked to the guys at the local coffee shop in town. They went to the cafe, and then they had an opinion about what we should do. And everybody's got all these opinions, but we don't really have a coordinated plan. So we began to build coordinated plans about 30 years ago. And now with our team, we work together as a team with your accountant, with your attorney, with your financial advisor, with your insurance people today, and we build out a coordinated financial plan. We believe that having a GPS, a guided planning system, in your farm operation, in your legacy for your children and your children's children to follow is the key. So if you're the senior generation in the room today and you're saying, how do I do this to ensure that the next generation of our farm can continue to farm or ranch? We've got answers on how to do that. I'm going to give you a lot of that today. Now I'm going to skip a few of these things. You can find this on our website. This is part of the process of some of the things that we do. But if you go to planwithfreedom.com, you'll be able to find all the information that I'm kind of going to skip through with this today. I hear a lot about, how do I put this together, Marissa? How do I sleep at night? These are the questions that keep people up at night. How do I communicate this plan to my family? How do I keep it fair? How do I keep it out of the hands of the IRS? How do I make sure that what I've put in place today will still work in 5 years and 10 years down the road? So we really talk about, what does the plan look like? Now, you might not know all the financial terms of what goes into this plan, but you know who you want it to go to, and you know where you want it to go, and you know where you don't want it to go to. Anybody here want to let the IRS inherit this year? So we have a very smart group. Anyone here want to give it to the government this year? Now, I know this is a little in your face, so if you're a politician, you probably don't love me very much right now. But I believe very strongly that the difference between a secured legacy and your hopes and your dreams of those things coming to fruition is the plan in the middle, answering these 5 most important questions in your farm or ranch today. Why? Why must we do it? What needs to be done? Who can help us? How comes from the who. What are the strategies, the practical things that we need to be able to do? And then when? When will we do it? When will we get it on paper? When will we begin this process? Because what happens is many times we can kick, right? Anybody heard of can kicking? We say, well, next year I'll get to that. Or the following year I'll get to that. Or, I know we got to do something, but at some point we'll do that. And so here's what we do is we bring together that plan, that team, those people around the table. And the most important question I'm going to ask you today is this: when was the last time your accountant, attorney, financial advisor, insurance guy, loan officer, banker, your team, your family got in the same room and talked about your plan? And I normally get crickets when I ask that question, because what they say is, I went to this guy for this, and this guy for this, and this guy for this, and this guy for this, but we really didn't have anything coordinated. So let me show you what a coordinated financial plan looks like. It's on paper. It's written down. It's got a recommended course of action. There's a process where it talks about what should you do for tax, legal, risk, wealth. It's a place where your will is there, your healthcare directives, your durable power of attorney, your trust documents, your action plan. What do you want to have done if the nursing home is an issue or long-term care is an issue? What do we want to do with these things? Where are all the insurances? Where are all the banks that we do business with? Where's all the debt? Where's all the assets? This is what a coordinated financial plan looks like. It does not look like just an insurance policy. It does not look like just a legal document. It looks like all of those things put together, along with you tell them the three things. If you write down nothing else that I give you today other than this, these are the three most important things that you want to do when you go home today. What do they need to know? What do they need to learn? And what do we need to do? So if you're here with your spouse today, what does he or she need to know? What do they need to learn? And what do they need to do? That's building a coordinated financial plan. And that's what your team around the table should be doing with and for you, because they're the experts in the room. And I liken this much to when you're working with doctors today. Anybody been to like a Mayo Clinic or like a big national hospital? If you've ever been to one of those hospitals today, they don't just have one doctor walk into the room. They have the cardiologist, they have the backup surgeon, they have an anesthesiologist, that's the person that puts you to sleep, count backwards so it doesn't hurt real bad when we cut you open. They've got a technician there, they've got additional nurses there. They got the guy that stands next to the surgeon that has like that tool, that little sucker outer tool, that tool, you know what I'm talking about? The sucker outer tool, watch Grey's Anatomy. They have that guy in the room. I want all of those people in the room sitting around the table talking to me. And the reason I want those people around that table is because I know my success ratio, if I have all the right experts in the room giving me that advice, coordinated today, that's the key. So that's the first step. Now, the second step to that is your family communication. And I've got some tips on here for level 10 communication. What does that mean? It means what do we need them to know, what do we need them to learn, and what do they need to do? You set the tone, mom and dad. You set the tone with what your children will do when you're gone, whether they eat Thanksgiving dinner together or not. You set the tone with that today. Now, I have 3 children and 2 grandchildren. I know what you're thinking. There's no way that girl could be that old. Yep, it's true. I have 2 grandbabies, 3 and 4, and here's what I've told my kids. Everything I have is going to go to the grandbabies if you guys make me mad. So they're cute, they love me. When I come in, they give big hugs and kiss grandma, and it's fabulous. So y'all better be on the best behavior. Now that's kind of funny, help me out. Okay, it's not funny at all. All the ladies in the room are laughing, and the men are like, oh my gosh, this lady's out of control. We've had what I call level 10 communication, and it's when you begin to think about level 10 communication, what it is that you want them to do, what outcome do you want them to achieve? And part of that is that you set an agenda, you look at the obstacles, you look at the options available, and you take an action step. Those are the 4 big keys of a level 10 agenda. Now, as we take you through this, one of the first things that I share with people is it's important to get your documents in order. So inside your planning kit, you would have received a little piece of paper that looked like this. There is a document checklist, and for those of you who are watching this online, you will be able to download this. There's little QR codes that have come up at the beginning of this presentation, or you can email our office at Plan with Freedom. If you go to our website, planwithfreedom.com, you can get a whole free planning packet from us. But inside of here is a document checklist. This is your get your stuff in order checklist. And it just says, what all needs to go into that binder that I gave you? What are all the things that they need to know where it's at? Because when people spend thousands of hours searching for your information, you know right where it's at, right? Well, sometimes I don't know where it's at, which is why I've got a planning binder. But when you think about how will your kids find that? Where do they find that? Do they even know where you bank and all the banks and all the people that you have relationships with today? Do they know where you've got credits and co-ops and different things that you're working through? So I first start to ask this question about when you're going on a road trip, do you know where you're at right now, and do you know where you want to go? And that's part of creating a GPS, a guided planning system. Do you know where you're at today? And that starts with an evaluation. Where am I at today? So inside your planning kit, there's a checklist of questions that you and your family can answer. And this little evaluation, this general checklist, is going to ask you some tax questions, some legal questions, some risk management questions, and some retirement management questions. Each one of those questions has a purpose for it. And this is the part that your team, if you can't answer, yes, we know where that's at and that's all in order, this is when you want to get your team involved and begin to answer those questions. Now, there's a lot of questions around this area of wealth strategies. Most of the time, in most circumstances, when I'm doing this with families today and when our team is working together with families, we get a lot of questions about, well, how do I retire? how do I even cash flow this thing? Because my farm is now supporting 3 generations. Me and mom, grandpa and grandma, their kids, and their grandkids are now on these generations. I'm working right now with a 4-generation farm where grandpa and grandma are living in town, mom and dad are on the farm, the next generation and his family is on the farm, and they got little bambinos running around. So when you're doing that, you say, well, how do I make that money work? Well, the first thing I would share with you is that we want to be very, very intelligent through this process about asking the right questions about who can we get fired. The first person I want to fire, who's with me on this one, the IRS. Tell me I've got some capitalists in the room. Can I get an amen, a hell yeah, or anything on this? Yeah, okay. So I'm a capitalist. I am literally proud to do it. I hire people. I employ people. I give jobs to people. It's not a bad thing. And I believe that if you don't make money on your farm, now you've become a donation-dependent ministry, okay? So we've got to ask better questions about how do we make that wealth last longer? How do we keep it in our generational plan to make sure there's enough cash flow during the good and the ugly and the bad seasons? I'm going to take you through some wealth strategies. One of the first things I'm going to ask your family is, where are we at in this retirement strategies planning process? What does that look like? If you've got young farmers that you're working with today and they're in their 20s and 30s and 40s today, what do they need to do in their 20s, 30s, and 40s? As opposed to someone who might be a little more seasoned or might be in that other category of, hey, we're the wisdom category. The wisdom category, you know what that one, that's the one where I'm in the wisdom category. I've been doing it for 30 years. I've been there a long time. We know how, right? But there's a process to making sure that you've got enough to live on for the rest of your life. I literally saw one of these last year. Someone had done a contract for deed. Contract for deed was up. Mom and dad were now out of money because they did not do proper planning. They just went to see some guy who said, do a contract for deed for 20 years. You'll be good to go and you'll probably be dead. And I went, well, that was a great plan. No one had another plan on top of this. And so they're sitting here in this process of want and need, trying to live on Social Security, and we're having conversations with people saying, well, yeah, I had to give this up at we just talked about auction sales here just a few minutes ago, and I'm going to give you some tax tips for that for this year. Now, this is going to be very important to those of you who are thinking about your retirement plan for you and your parents today, as you're thinking through what are the sources of income and how much will come to them annually or monthly. The most important question that you need to ask is, how much do they need? How much do they need today? What's the current value of where all these things are today? The next thing we need to do is we need to look at, how is it diversified? Where's this going to come from? And this is where wealth strategies come into play. Part of what our team does differently is we're not just accountants, we're not just attorneys, we're not just insurance. We are also doing full financial planning. And we're giving advice in this areas of how do you diversify this? I've had lots of questions today on, should I invest in this 1-year CD? Should I invest in this? Should I do that? Well, maybe let's learn a little bit more about your situation today. One of the areas that I ask the question is, how is those financial people getting paid? Now, I'm not here to do your planning. I'm here simply as an educator. But this is an important question that you want to ask your people today. How do you get paid? Now, I'm from North Dakota nice too. I get it, okay? I'm from North Dakota nice too. I grew up on a farm. We never would have asked someone, well, hey, sir, how do you get paid? But we've got to ask better questions today to make sure that we're protecting and preserving the wealth within our family. There are 2 ways that you can invest your dollars today. The first way is what we call retail investments. The second way is what's called institutional. And you want to ask the question, are they thinking about taxes? Are they thinking about inflation? Are they thinking about those things inside of your financial and retirement plan? Because as you're building out contracts long term, we want to cut out some of those fees and expenses. Now, the difference here, very quickly, very easily, here's how you know the difference between a retail or an institutional firm. In a retail firm, my very best friend in the world is a real estate agent. And every time she knocks on my door, every time, it's 6%. Every time she buys, every time I sell, it's 6%. Yes or yes, right? That's what I'm paying for real estate. Now, when that happens today, she doesn't come back and mow the lawn, fix the furnace, take care of the roof, do anything for that house. She was paid for the transaction and then bye-bye. That's a retail investment person. So you want to ask, are you getting paid a commission or a sales charge, or are you getting paid a flat management fee? And we call those wealth advisors, right? When you're talking about a wealth advisor, you want to ask that question because sometimes there are people that call themselves wealth advisors that aren't really wealth advisors. They're really great salespeople that make commission, and they're doing a wonderful job for you most of the time. But you want to ask the difference, is there a better way where instead of paying a 5% fee, I could pay a 1% flat fee? Because internally in most of those investment accounts, you are also paying a 1 to a 1.5% internal fee for annual fund operating expenses, sales charges and commissions, and all of these pieces, they add up. So you want to get it in writing. And I just simply do this, and let me give you a quick tip today. If you're going to invest any money, anywhere, with anyone at any time, here's what you say. Can I please get an email in writing with how you get paid and how much commission or how much this transaction cost me? Just put it down in an email, ding, 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 and now you know. Because are they getting paid to sell you something or are they getting paid to give you advice? Now, I'm a big fan of flat fee advice people. These are not free. To build out a true financial plan, to get a second opinion on where you're at. I know many people in the room have done estate planning, have done transition planning, have done wealth management planning, have done that. Sometimes it's worth getting a second opinion. Just thinking about that doctor. My local doctor does not do my cardiologist surgery. My local doctor makes sure that we can get rid of that scratch or that itch you can't figure out, or that rash you don't want to tell anybody about. That's funny. Kind of funny? Little funny? Okay. I got a head nod out of it, so we're good. But you know, when we start thinking about those things, we want to think about how are people getting paid through that process, and are they in it to win it for you, or are they in it to win it? Now, I got a lot of questions on this in the last few, especially the last 2 years, on the area of annuities. There are 3 basic type of annuities on the marketplace. There are fixed annuities, indexed annuities, and variable annuities today. These can be market-based or non-market-based. But when you start looking at rates right now, upwards of 5.5% on many annuity companies that are paying 3 to 5 years, and now I'm not giving you any individual company, but I'm saying this is something to be interested in as you're thinking about how do I preserve my wealth, something that's for sure insured and guaranteed for me. Now, this, as you begin to talk a little bit about some of the annuity features, these are things that you want to ask right questions on. Is it insured? Is it guaranteed? How do I get my money back? Does it bypass probate? And I'm going to get to some really important tax features here in just a minute where you can use products like this in your portfolio with your financial people. But you got to ask them about them, right? You got to ask them. And here's what I share with people. If you get an idea from someone else and then you bring it back to your guy or your gal and they say, well, I could have done that for you. Here's my next question to them. Then why didn't you? Because if you were working for me and you could have done that, why didn't you? Why didn't you think about my family or my situation and bring those ideas to me as opposed to me having to go search them out and bring them back to you? Because if I'm paying for your education, that's a whole nother story. Now, I learned on the farm many years ago, you got to pay for your education. I had to pay for a good education, right? I had to pay to know what to learn, and what to do. And my grandparents taught me that at the end of the day, if it's going to be, it's up to me. If it's going to be, I need to build a team around me that makes a difference. So there's a whole section of the Internal Revenue Code today that you can utilize today, and I'm going to give you the exact line on your tax code. Please, please take a note of this page and then the next couple of pages I'm going to give you, because you can take this back and use this with your accountant or your CPA to save thousands and thousands and thousands of dollars on your tax return this next year. And you can utilize these before year end. Now, this is really important. One of the things that we will do with things like deferred grain, if you've got some grain in the bins and you say, hey, I just don't want to sell it this year because I don't want to pay the tax on it, I ask the question, well, what's the value of that grain if it's sitting in the bins rotting? Or what's the cost to keep it from not rotting, right? What's the cost of preservation of that grain that's in there? What happens to the quality of that durum a year or 5 or down the road if you hold on to it for that long? So there's a little section of the code under section 415 of the Internal Revenue Code, and this is why I'm a big nerd and I couldn't get a date for about 5 years because I quote tax law. This little section, solo Ks, you can put a significant amount for you and your spouse, up to about $70,000 depending on your age right now. 100% tax deductible off the next line on your tax return I'm going to give you. If you've had earned income today, this is an opportunity that you want to ask our people about. Now, I've got some advisors here in the back of the room. If you have any questions about where to find this or how to ask a better question to your people on this, my guys can help you with that. The other area that I want to speak a little bit about, and this is big if you are getting ready to retire in the next few years, because this is a place where you can position the sales off your farm today. Position those dollars into things like defined benefit plans. There's a little section of the code. Under section 412 of the code, there's a whole section that talks about 3 different types of retirement plans. Deferred compensation plans is the first one I gave you. Defined benefit plans is the second one I'm giving you here. And you can write off a couple $100,000 under a pension plan. So if you work for the government for, say, 20 or 30 years, at the end of that 20 or 30 years, the government gives you a pension, and you can take a monthly income off of it till Jesus or the other guy takes you home. Get it? Jesus, other guy. Funny. I can't get fired, so I say the stuff in corporate America that would get me fired every day. But I'm like, okay, just take a pill. I'm not trying to convert you. Take a breath. But defined benefit plans, this is an opportunity where if I've got some deferred grain and I want to take that out of the bins, and let's say I've got $1 million over here of deferred, and I'm not buying new equipment, I'm not buying a new iron because I'm getting out, right? Next generation is buying that iron, or the next 2 generations are buying that iron today. This is where my defined benefit plan, I can position those dollars back into a pension plan and write off a couple $100,000 every single year off of this next line in our tax return. Now, I'm going to give you the line right here. If you go to these pages, line 16 inside your tax return today, Schedule 1, page 2, line 16 of your tax return today, there's a little word there that, 2 words actually, it says qualified plans. These plans I just gave you are qualified plans. And they're a section of the code that many times I look at tax returns with my team, and as my team looks at those, 9 out of 10 farmers and ranchers are not using this line on their tax return. 9 out of 10. 9 out of 10 are giving away money to the IRS every single year because they don't know what they don't know. And they say, well, my guy talked with me about having a SEP, or my guy talked with me about having a traditional IRA. Well, that's a drop in the bucket compared to what you can do with these types of plans and the cash that you can capture for your future and for future generations. Our family farm failed and died because we did not have enough cash. That's the bottom line. I have never met a family farm that literally lost their family farm because they had too much money, because they had too much cash. But I've met a lot of family farms that are no longer farming today because they didn't have enough cash. This is a way to build some of those dollars, and instead of giving it to the IRS, you put it back into your retirement. Whatever portion you don't use, you send on to a beneficiary upon your passing. Now, strategic tax planning, here's an important question to ask you. Do you have a tax preparer or a tax strategist? Here's how you know the difference. So if you're in this room today, here's how you know the difference. A tax preparer says, come on, Fred and Linda, bring in your stuff. We'll go through it and then tell you how much you owe. A tax strategist says, come on in, Fred and Linda, let's go through your numbers. Let's see what your 2, 3, 5 options are. Here's some strategies that you can use, and here's what the final tax will be at the end of the day if you use these strategies. That's a tax strategist. Our team is made up of tax strategists, and we work along with your accountant and your team today to make sure that they've got these high-level tax strategies in place. We do advanced farm planning. That's the difference between a Mayo Clinic and a local doctor. It's not a bad thing, it's we need to work all together as part of that planning team. So again, I'm gonna give you that line 16, really important. And then the next area that I wanna share just a little bit with you about is this particular section. How today are you structured for the self-employed? Are you structured as a self-employed individual under your Schedule F today, or have you structured under an LLC? Now, for all the young farmers in the room, when you talk about things like Social Security and Medicare and the taxes that you're paying in, every single year right now, you're gonna pay the IRS up to a couple, up to well over $100,000, 15.3% for a self-employment tax. Your self-employment tax of 15.3% goes literally for Social Security, Medicare, those FICA taxes that we're talking about. Your next generation today, how many of you, if you're under 50 today here in the room, how many of you actually believe you're going to see what they have on that statement for Social Security? Now, if you're over 50, you're seeing these numbers today, but they've ratcheted this thing up. Years ago, when I first came into the industry, a couple things was very interesting during this time. When I first came into the industry, the estate tax was $675,000 back then. Up to $675,000, you could pass estate tax free. Anything over that was taxed. Now today, you can pass up to $12,920,000 estate tax free. But that's all changing. By the way, this is not in my presentation, so please, please, please write this down. The most important year that you want to check your estate plan right now and you want to be preparing for it today is 2025. Why is 2025 so important to you? Because past 2025, if you've not yet met Jesus or the other guy, you're going to meet your maker at some point. And when that happens past the year 2025, right now you can leave a little over $5 million per person in the year 2025, as opposed to the $12,920,000 that you can leave in 2023. So all those laws are changing, and they're coming for it. Now, when you start looking at land prices in Minnesota and North Dakota, this whole border area around here, I was just talking to someone that just this morning that said they were on the Iowa border and tillable land sold for $32,000 an acre. And he said in his area in Minnesota, it was selling for $18,000 an acre. That adds up. Yes or yes? It adds up. And you start looking at balance sheets today, and you see millions and millions and millions of dollars. We cannot cash flow that unless we've got the production there. So we've got to cut the fat somewhere. Yes? We got to cut the fat somewhere. And where I want to cut the fat today is to educate, empower, and equip people with tax planning strategies. That's one of those components. But remember, I talked about tax strategies, legal strategies, wealth management strategies, and risk management strategies. When you look at these numbers today, if you just structured that from a Schedule F to a LLC or an LLP today, and you paid yourself a wage or an income, you can save on whatever you've paid yourself over and above that wage at 15.3%. So if you pay yourself $100,000, which would have normally gone through your Schedule F on your farm operation, and now it's going to go through your LLC, on every 50 grand you do that for, that's $7,500 of pure tax savings. Would anyone like a check for $7,500 today? Yes. Yes or yes? Anybody want a check for 15 grand today? Yes or yes? This stuff here makes sense because it's literally written in the tax laws around us, but most of the time people just don't know these things even exist. And so it's really important that you ask your people this: is there a different way that I could be structured to save more money? Now, there's two things that structure give you. Oh, wait, let me go back 1 second. There's two things that structure give you. One of the things that structure allows you to have is some liability protection. When I say structure, structuring yourself like an LLC, a limited liability company, or a limited liability partnership, or an S Corp, depending on what you're kind of looking at today, or a C Corp, depending on what you're looking at today. But there's a lot of different options on the marketplace. So an important question to ask your tax advisor is this: is there a different way for me to be structured today? The second thing I'd ask them is, can you run me the tax calculations about what that would do over 10 years for my farm or ranch? And the numbers that come out of there can be astonishing. Now, we've put together a transition planning timeline for you to talk about all the different things. Now, I teach just a full-on transition planning workshop. I'm literally not going to give any of it to you today because it's top of the waves. It's too much in one session. But this really talks about, what do I do with hard assets, things like land, things like equipment, things like that today? What do I do with active income versus passive income? Active income being things like your farm ranch grain sales, your equipment sales. If you decide to sell that equipment today, how is it taxed when you sell it? If you've depreciated that equipment down to nothing and now you have an auction sale for $3 million worth of that equipment, what's it going to do? You have this thing called recapture of depreciation, and now it's income taxable to you when you do the auction sale. I've got a strategy here in just a minute that I'm going to share with you that can help you avoid the taxation at the time of the auction. Let me say it again. I've got a strategy that I can help you with here in just a minute that's going to help you through that process of avoiding the taxation if you have an auction today. Now, there's a couple other things that we want to know. We want to know who's getting what. Have we determined how much income? That's why I gave you that little short income set at the beginning of this. Who's getting what for income and when? And how long will that last for? So everything from equipment to land sales to leases to what do I do with my deferred grain? This is a process A to Z. So I've got a checklist of those things, and this is included in your planning packet. So if you got a planning packet, it's one of the things that we've already printed out for you, and we're giving it to you for free today. If you're watching online, you want to print this out because it's an A to Z checklist. When you get your accountant and your attorney and your financial people in the same room, we need to be asking these types of questions. And here's what I hear. Thousands and thousands and thousands. I have spoke to thousands of people in 30 years. Thousands. Every year, they put me on road shows, and I'm all across the country giving a presentation similar to this or full-day workshops. And what I've learned is this. It's the same everywhere. Whether it's Minnesota, Wisconsin, Texas, Oklahoma, South Dakota, Montana, North Dakota, which is where I'm from, it's the same everywhere. We all have these same questions. How do we put it together? What are the steps we follow? So we've given you the A to Z transition guidepost with this. Please take that and utilize that today. Now here's 2 sets of categories I'm going to give you. It's right here on the screen for you. Again, the first one is what do I do with the operation? The second one is what do I do with the land? Why did I separate these 2 things out for you? Well, it's really important because this is active income over here with the operation, and this could be passive income. Let me explain the difference of why I'm saying that. This is income taxable to you, and most of the time this is capital gains taxable. Now the reason I say most of the time, because if you own your land inside of a C Corp, which if someone did that to you, go back, kick them, okay? Just kick them. I'm not saying violence is good, but in this case, I feel like it's appropriate. Okay, that's funny. The views of Marissa Nielsen are not the views of Farm Credit Services, any of the organizations I speak for, the Red River Farm Network, Freedom Financial Group, any of the groups I talk to, okay? So I just take a little deep breath. I'm having a little fun with you. But land inside of a C Corp is taxed differently. It's not taxed at that 20% rate. It's now active income. So when you look at the differences between what you can do with your operation, should I do an installment sale? Should I do a cash out? Should I do some kind of an auction? What are my options? Same thing when you're looking at your land. Should I do cash rent and hold on to it and get a step up in basis when I pass on? Should I do an installment sale over time and pay the tax today and get it out of my name because I want to protect it from things like nursing home? Should I do a quit claim deed or a quit claim deed with a life estate where I get to keep the income off of it till I'm gone? There's a lot of different strategies here. I'm giving those to you on the board so you can take them back and talk with our team or your people to really help you through that process. Now, as promised, this is one of the most important slides that I've got if you are in a place of saying, hey, I am not going to be farming going forward in the future at some point, and I've got equipment sitting in my bins and in my barns today that I need to get rid of because, you know, we don't let that iron just rot, right? At the end of the day, there's value in it. If I've got a $2 million equipment line and it's depreciated out to nothing today, what happens? If you go sell that equipment today, either piece by piece or at an auction, you're gonna pay tax. Let me give you some quick math. You sell $2 million worth of equipment, depreciated to 0. You have to recapture that depreciation, yes or yes? Somebody give me a yes or yes, yes, right? We have to recapture that depreciation. That's gonna go onto your income tax table today. So if you're in the state of Minnesota, North Dakota, Iowa, South Dakota, Montana, doesn't matter where you're at, we're all paying taxes, yes or yes? We're all paying taxes. At the federal level, that's a 40% tax on $2 million you're gonna end up paying. And if you add on your state taxes, it's more than that. So let's just do quick, simple math. $2 million at 40%, how much are we gonna give the IRS? $800,000. Who loves that plan? Said by no sane person ever, right? No sane person says, yes, I would just love to write a check to the IRS for $800,000. So there's a strategy here that you can utilize, and I've got our advanced planning team. I'm not sure where they're at in the room. Nick Mock, where are you at, guy? He's the bald-headed guy, and then we got Jay Caldwell over here. If you got questions on this strategy, they can give you a few more details that go with it. I'm gonna give you the top of the waves here today. But our team is here to answer these questions for you, specifically in the area of how do you do this? So you set up a trust, we transfer the assets into the trust, we sell the assets inside the trust. When you do a sale inside of a charitable trust, that is a non-taxable event. So the $800,000 that you would have currently paid to the IRS this year is not something you would be paying the IRS this year. Now the opportunity there is, now I've got a boatload of cash sitting inside the trust, but I need to live off that income. So that $2 million gets reinvested, and whatever I pull out of that trust, I pay income tax on that amount. So if you pull out $100,000 a year and you're paying 20% tax on that 100 grand, instead of paying $800,000 up front, you pay that $20,000 on the 100 grand that you took out over time. Now there's multiple different types of trusts, there's multiple different ways to set them up. Every family situation is different, and so that's why I suggest if this is an area where you say, hey, at some point I know we're gonna have an auction sale, this is something you wanna talk with your folks about. Now this doesn't just work for equipment, it also works for grain. I've got a lot of folks that are in oil field country, and they're sitting on those grain assets, and they've got all this other income from other sources. Again, when you start thinking about oil, you start thinking about gravel, you start thinking about water rights, all of these different areas are income sources to these folks. So they're saying, hey, Marissa, can we do that with other sources of active income? And the answer is yes, you can. So if you've got grain, we literally just had a client do this. They transferred several $million between their huge operation into this. Now, it doesn't have to be several million, it could be several $100,000. But several $100,000 taxed at 20, 30, 40%, it adds up over time, yes or yes? Yes. And so this is one option that you need an advanced planning team to talk with you about, but this is cardiologist work, it's not local doctor work. Okay, so I'm gonna take you through risk management, and this is an area that I spend a lot of time talking about how to protect it from the nursing home. How do I put those assets in a position where I can protect what I've worked a lifetime for? There are different types of insurance today that need to be analyzed. Life insurance, long-term care, disability, AD&D, we call that accidental death and dismemberment. Your family today, when you begin to think about all the money that we spend on insurance every year, how many times have we heard the insurance company won? How many times? A lot. We hear that a lot. In fact, just today, I had someone talking with me at the booth, and they were talking about reviewing their insurance policies. And I said, yep, these are things that we do. If you come to a workshop like this, we will actually do a free, no cost, totally complimentary insurance review. Now, normally we charge $250 to review those contracts, but if you sat in one of our workshops or seminars, we will do that for free. If that's something you're interested in, you can put that on the back of your evaluation form. Every one of you received a little evaluation form when you came in. And as you look at that evaluation form, just write on the back, hey, I want to get a free insurance review, or I want my free investment review. There's two things that we'll do for free coming out of here today, free investment and insurance reviews, and the second one is we'll do a free kick the tires meeting. And a free kick the tires meeting is to get a second opinion on where you're sitting today, and do we see any holes in your plan? If they're there, then we talk about, okay, well, here's what the steps are to go forward. But that's all part of our evaluation process. Now, why do I take you through that? Because I spend hours and hours and hours for 30 years going through insurance policies and asking these questions about when will it pay, how will it pay. My dad, just within the last 2 years, has passed away. I spent literally every week for an entire 5.5 years fighting with an insurance policy that he had. And so as I fought with these long-term care companies, because he purchased long-term care, they don't want to pay for this, they don't want to pay for that. And then he had a policy today that as he bought these insurance policies today under long-term care, he had to submit the claims after they were paid. So this is also not in your presentation. You want to write this down. Do I have a reimbursement policy or an indemnity policy? If you don't know the answer to that, please, please, please write this one down. An indemnity versus a reimbursement. This is incredibly important to you because it will cost you and your family thousands of hours and days trying to fix this problem down the road if you have it. Long-term care, disability, life insurance, risk management reviews. I talk a lot about life insurance as well because people have spent thousands of dollars buying policies. Will the policy pay out? Who will it pay out to? Who's the beneficiary? Those are important questions. Who owns the policy is also really important because if you were to go into a long-term care facility and you own your life insurance policy and it has cash value in it, it's an asset that can be taken from you to pay for that nursing home. It's an accessible asset is the words that they use. Now, if you own a life insurance policy, you've got $100,000 of cash value built up in there, and you were planning on giving this to a non-farming kid, and the farming kid over here is going to get the land, and now that policy's at risk, and you purchased a $300,000 or a $500,000 or $1 million policy, now that policy's at risk because the cash value in that, it has to be utilized to pay for the nursing home. Now we've got family distress. Now we've got family problems. And so I share that with you because if you can prepare versus repair, this is the key. Now, I've got a preparation tool. I do not have a lot of these. I only have a few. But this is a long-term care, everything from assisted living care to in-home health care to full-blown nursing home care planning packet for you, along with checklists for you and your family at the end of this, which will take you through step-by-step of each part of the process so that you get what you want, how you want it, in the way that you want it. You can find this, my guys in the back have a couple of these here left. We've got a couple of those at the booth. But if you did not get one today and you want one of these, just put it on the back of your evaluation form and we'll mail you one out. But it's the long-term care planning booklet. This helps you everywhere from in-home health care to assisted living care to full-blown nursing home. There are only 5 ways to pay for long-term care. Pay for it with cash, buy an insurance policy, a long-term care or a nursing home policy is what they're called. Utilize annuities with a long-term care benefit, right? Ultimately, you can gift away your stuff and go on the state, right? Or you can buy a hybrid life insurance policy. Those are the 5 ways to pay for long-term care today on the marketplace. This is it. This is the 5, guys. And so when you start looking at your list and you say, well, how do I pay for this when this thing is $10,000, $12,000, $15,000 per month? My cash goes pretty quick at $10,000, $12,000, $15,000 per month. I have a couple in the Carrington nursing home, and they were paying $36,000 between the 2 of them because mom and dad were both in a nursing facility. What? $36,000? Like, this is insane. I mean, they're spending $400,000 a year on nursing home. And yet, what's the alternative? Who's going to care for mom and dad? So really thinking through this, you can prepare or you can repair, and that's the question I ask. Now, when we talk about risk management reviews, this is one of the things our team is trained as specialists to do for you, is to look at who owns the policy, who gets to keep it, who's the beneficiaries, have we gone through a risk review? If you've not done a risk review in 2 to 3 years of all of your insurance policies today, life, long-term care, disability, risk policies like umbrella policies today, these are things that need to be in a financial plan for you because they will be the preparation tools that you need. Now, a couple other areas that I talk about, and we're not going to have a lot of time to go through this, but this is one area that you can structure your assets today, which is limited liability companies. How can you structure those assets to keep it passing and flowing through the family? There are things that you can do inside of these to protect your next generation from lawsuits, bankruptcies, and divorce if these are done correctly. Lawsuits, bankruptcies, and divorce. Now, I've got a How the Farmer Uses an LLC guide inside of here as well. We've got some extra ones of these at our booth if you have questions about that and limited liability partnerships. But I want to talk a little bit about a few estate planning strategies here because we're getting short of time. Who do I give it to? How do I keep it fair? What do you own? All of these questions. Everything you own today or have an incident of ownership in is included in your estate upon your passing. So if you own a life insurance policy today and it's in your name, that's included in your estate tax limitation as part of your death benefits that the government assesses for estate tax. And so when you fill out this groovy little form called Form 706, this is one of the forms that they're going to ask you all these questions. So they're going to ask, what's in your will? What's in your trust? Who's getting what and when and how? And so all of these things are added up. By the way, who assesses the value of your equipment, your home, your assets today? Cash is easy. $1 is worth $1. But equipment, your home and your farmstead out here, your land, those are all assessed by someone else, not you upon your passing. And it's not what you have on your balance sheet. It's what the assessors come in and say it's valued at and worth on the day that you die for fair market value. Now, these are the areas of how we help the families go back in, and we call it clean up on aisle 5. How do we make sure we've got appropriate values in here for you and your family? Now, I want to share a little bit about these types of documents. These two on the right side are called living documents. The first one is a healthcare directive, and the second one is a durable power of attorney. Each one of these documents are what are called living documents. Everyone in this room needs these two documents, for sure. If you are over the age of 18, you need these two documents. Now, this is near and dear to my heart, and I spend a lot of time doing a lot of these documents with our clients. A healthcare directive directs someone in your family on your final wishes when you are still breathing, you're still on this planet. And I'll tell you a quick story, and I don't tell you this story because I just like to bring out the harps and violins. But in 2015, my fiance called me, and he said, "Babe, I can't walk." And I said, "What?" Now, get the picture here. He is 6'3", built like a brick house. He's a big boy. Ex-Army Ranger. He's strong as an ox. 2 weeks before, he picked up a couch in the middle of my house. I'm a traditional girl. He lived at his house. I lived at mine. He picked up this couch in my living room and went, right? 2 weeks later, he can't walk. So I get over to his house, put this huge man on my back. His name was James. And I literally drag him to the emergency room. And a few hours later, they looked at me and they said, "Hey, Marissa, we are so sorry to tell you, but James is full of cancer, head to toe. And we're going to airlift you in the morning to Minneapolis, and he's got an 8-inch tumor on his neck, his back, and his spine. And he's probably not going to make the night. But if he makes the night and we can get him to Minneapolis and they can get the tumor off of his spine, you might get a few days with him." Well, turns out we get to Minneapolis. They take off the tumor after a 27-hour surgery. And me on my knees just praying the whole time. And then we spend the next 3 months, I spend the next 3 months sleeping in a hospital chair next to him, and they let me stay. And I was incredibly, incredibly grateful. But I learned the value of a healthcare directive and a durable power of attorney because in the middle of the night, I have attorneys on my team. So I call my guy and I say, "Hey, I need you at the hospital." And I call my other team members and I say, "Hey, I need you as witnesses at the hospital before we get transported out of here in the morning because James does not have a healthcare directive, a durable power of attorney, or a will. He has nothing in place." Now, we weren't married. So I said, "That's your stuff. This is my stuff. We'll take care of it one day. Someday we'll take care of it." So in the middle of the night, couldn't give him the medication he needed because I needed him to be clear in his mind about what he wanted. And that sent us on a 3.5-month journey until I held him in my arms as he took his last breath. So when I'm here talking to your families, I'm speaking from a place of experience because I've sat around hospital beds and helped people making final life decisions. I've sat with your families when they did not know what you wanted and they asked the question, "What do you think Mom and Dad wanted? What do you think they'd want us to do?" So if you do nothing else past leaving here, just get these documents in order. This is something we can help you do. And then it's the question, Where do I leave it? And who do I leave it to? Do I put it in a trust? Do I put it in a will? Where does it go today? Do I want it protected from lawsuits, bankruptcies, or divorce? Do I want to just pass it outright? How does that work? And so, we're going to give you top of the waves today, guys. There's just too much to do all in one session. But I would share with you, when you start talking about estate planning and transition planning for your family, you can leave a hole in the heart of the people that you love, or you can make sure that they know this is what you wanted. You can make sure that they know this is what mom or dad wanted. And I'm incredibly grateful, but the hardest day of my life was the day that I had to pull the plug, because I promised him I would do that. And I'm grateful I get to tell the story to you, because my hope is if there's one of you in this room, if there's just one, I will come for the one, because I don't want your family to have to experience what other families I've worked with have had to experience. So putting these documents in order, there's a whole lot of things that we can do to help your family do that. And we begin to ask these questions. What do you want and why do you want it? What do they need to know? What do they need to know? Your family, the people you love. What do they need to learn? What do they need to do? Let's start with just the top 3. Let's start with that. And then let's ask some questions. These 5 basic questions. Why? Why does it need to be done? What needs to be done? Who can help us? How do we get it done? And then when will we do this? When will we make the commitment to put our estate plan in place, begin to have a family communication plan, begin to talk them through with tax strategies and legal strategies and the thing that we do? This is how we build a plan. We first determine your goals, and we find out what's most important to you. What are the goals? And then we go from there into, let's build a plan. Let's create some strategies. And then we execute those strategies, put that plan in place, and then monitor and navigate it. That really is the 4-step process. So we've got that worksheet in here for you today as well. This is something that you and your team can walk through. And at the end of this, we've got some planning packet information to get you going, to help you with this process. Now, our team is here to assist you in doing that. As I mentioned before, we've got offices in Minot, Bismarck, Jamestown, and Fargo. We travel. We spend a lot of time in Minnesota. We're on the road a bunch. I am the road warrior. I'm on the road a lot. But part of the process of helping you do that is that we want to give you a sense of what's out there. So if you could do me a favor today, 2 things. The first one would be this. If you're here in this room, if you could fill out the evaluation form and just help us get better. I want to meet you where you're at. What's the areas that you would have liked to learn more about or get more information on? There's only so much that we can do in an hour, but your feedback is really important to me. And so I want to do my very best for you. I want to make sure that it makes a difference for the families I'm working with, that when you leave here, you are equipped. You are equipped with tools, with strategies, with the things that you need in order to plan and prepare for your family. They need you. They don't know what's in your head today. We don't automatically know what's going to happen tomorrow. Even to that extent where nobody in this room brought their crystal ball today to work, right? Not a crystal ball that actually works. We don't know what the future holds, but I can tell you it is never a mistake to prepare. It is never a mistake to have a plan in place. Even if it's not a perfect plan, a plan is better than no plan. A plan is better than no plan. And when you think about your life today and the legacy that you leave behind, now please hear my heart when I say this, because I always tick people off when I say this. It is not your balance sheet. It is not your balance sheet. We can leave people better than we found them. It's our values. It's what's important to us about who we are and what we stand for, about who it goes to, and who we put in place as stewards of what passed through you. You are not a river. You are a reservoir. You are not a reservoir. You are a river. It's going to flow from you to someone at some point. And my mother taught me on that farm when we moved into that 2-bedroom trailer house in North Dakota, in Minot. When I was 14 years old, you can be a victim or you can be victorious. You choose the path that you're going to choose, right? You choose that path. We can't choose the circumstances or conditions, but we can choose what we do about them and with them. And so we're here to help you with that. If you'd like to get any of these resources from us today, my entire planning, I shouldn't say my entire, a part of my planning team is here at the back with you. There's Carl, if you want to give a wave, Nick Mock, if you want to give a wave, and Jay Caldwell. They're back there to answer any questions you have. We will stay and answer as many questions as you have today. And please feel free to pick up those planning packets. We'll be here tomorrow at 3:30 and 2:30 on Thursday, doing again a same presentation to take you through. But please feel free to call our offices and ask any questions that you may have had. Thank you so much for being with me today. It was my great honor to serve you. I hope you received something of value that you can take home and utilize today. Thanks for feeding America. Thanks for doing what you do and taking the time to be here to learn something new for you and your family. I am so grateful that I get to be part of it. So thanks very much for having me.